Hey everyone, I think we are back here for the weekly meetup. I think we are changing one more thing this time. We are live streaming on YouTube. So if you don't want to be part of the Zoom, you can also stream it, and it will also help us get this live immediately. So I think this is the one feedback we had about getting this uploaded quickly. So I hope that this really helps. So I think do send us the feedback, and as I said, like you can also have the questions now on YouTube in addition to uh, in this Zoom chat, so that way we are able to go live. All right, so I think it's an interesting week. So let's get going. So we also have this week in numbers, which is going in every week. We try to summarize what's the key things, and we will be discussing here. So feel free to put in your questions either here on YouTube chat. So both of them we will be watching. So let's see. I think we have a few people here, but there are some on the live stream. So I am assuming people are kind of split now across the board. So let's share the screen. I will talk through the market, how it is looking. So let's go look at that. I hope the screen is visible. So yeah, so I think as we discussed previously, so there is this the whole drop which we were talking about. There was a good bounce this week, so we got a reasonable amount of recovery from the 5 weeks of drop. So this was a positive week. So that is one thing which we need to notice. While we have met the resistance zone, so this was the, I would call it as a oversold bounce, where we had this 200 moving average acting as a resistance, as well as there's a trend line coming in from the top, which if you can see, which was started after Iran war. And I think now the 6660, or we could call it 6600 on the S&P 500, is acting like a resistance zone. So while we are waiting for this to resolve, as you all know, what really happened is there was this whole expectation from the Trump's announcements and so on, that whether that there will be a conclusion to the war. And market really was disappointed because, as you can imagine, that we had a pretty much right now everybody is waiting for the, like, how will this oil embargo will be resolved. Very little oil is traveling through the Strait of Hormuz, and I think there was some expectations from built up, and as it happened, I think it was more or less kind of a disappointment that there was nothing new. Trump just repeated everything around, how great US is doing in this war. And to be frank, we did not expect, like at Proflex, we have been talking about this. If you're part of the WhatsApp group, we have been talking about that. The usual, like, why the market fell in last 2 weeks was because once people realized that it is beyond what Trump can do in terms of the war continuing, and especially forget what the war means. I think this was always an asymmetric war. Iran was no competition to US and Israel's firepower. I think it's more about whether the Strait of Hormuz can be opened. And what is happening there is actually, since Trump's announcements, or whatever you can call it, the speech, it's basically we are seeing the Brent and not only Brent, but I think WTI is making new highs. Of course, there has been this is a great point of discussion. A lot of people have been asking us, like, why we should be seeing this kind of a you know uh, this kind of a very, very, like, in a sharp up move in WTI, even though there is no problem with US crude and so on. I would say the biggest thing which we are monitoring is that while the Strait of Hormuz and the Brent oil, all of that is still uncertain, there's a lot more demand for US oil. Like, US exports are rising. People want certainty. It's less about the price, it's more about the supplies now. And people are locking in the price. Like, even when the price can go up, the expectation is that if the supplies are not clear from Middle East, there will be more and more demand, and whatever is the limited supply available, that will be bid up. And people are locking in, means that I'm sure these are buying from Europe and from many other places. And Trump was actually acting like a salesman for US energy when he gave the speech on the war and said that people should come to US to buy. So it is impacting because people, it's not about whether it is cheaper, it's more about whether it's available, whether you can actually lock in a price. and that's what we are seeing. So I think overall, definitely not great from inflation perspective, as we discussed, and we are also having this um, whole how we are discussing in the macros stuff, like Fed is in a bind now. Hope, like, there was an expectation of rate cuts this year. All of that is now out of the window. In fact, people are now starting to talk about rate increases. We did review the 10-year yield. It did broke out of the downtrend since this war erupted, especially in the last few weeks. And it has come down from I would call it the danger zone of 4.5% and above. So it's kind of settling down. So that's a relief for the market somewhat. So it's acting exactly similar to the stock market, where we had some relief here. So I would call this as a mostly kind of a correction, but we still in uptrend. So we need to watch it carefully, and this will be very closely tied to what is happening with the crude. So I think overall, the market are going to be pretty much watching how this evolves, how I would say, what is the traffic like. There is some rumors around Oman negotiating and creating some delivery path, where there was, since last 24 hours, we are seeing some of the news around how some of this crude is passing through, and through very much through the Strait of Hormuz, but through a different channel, which is basically through very close to Oman. And there have been some negotiations supposedly happening. But I think it's still a very, very much a trickle of supplies. So in short, I think market is in a stalemate. We did have oversold situation. We kind of got resolved a little bit. Actually, let me also share again. Um, let's talk about the VIX, because that was one thing which is also interesting to watch. So as VIX was elevated for quite some time, this also came down. So what happened here is now, as we mentioned, right, as we have been talking about last week, that why the VIX of 30 was unsustainable, because that almost pricing in 2% move per day on an average for S&P 500, which is like impossible to have. Like, it is way outside 2 sigma event. And so now what we are seeing is that the volatility is coming back down, which also means that market is kind of settling into a little longer terms. The panic is over. So what we were seeing when market was dropping really badly last week, this was more of a panic situation. So we did talk about it. I'm sure a lot of people, like, who are part of the our various subscriptions, whether you're managed account or so on, we were talking to almost everybody and explaining why you should not panic here. This is something which is not sustainable. But now, as I said, right, while the VIX is down, right now it's more or less a stable environment where it is still elevated. I won't call it like a steady state. I think steady state, as you can see, the 200-day moving average of VIX is more or less 18, which is still quite a way down. It's no longer in the normal state. But on the other hand, the war premium is built in, and that is what we are seeing right now. So I think these are the few factors which we are watching, and I think we would recommend people to understand the dynamics of what's really going on in terms of S&P 500 being, I think after the huge correction, it's bounced back. So it's more of a, you can call it as a oversold bounce, people covering their shorts. Now we are oscillating between this resistance zone and for the downside. But on the other hand, the earnings are still expected to do great. I mean, as we have been talking about for the last 3 months or 6 months, even though markets are going nowhere or in fact corrected, we have seen the tech still doing great. We still believe that whether this resolves one way or other, means, of course, the length of this conflict can impact some of those if the energy prices stay high. But other than that, market is not yet worried about those. There's still an expectation that there will be some resolution coming from whether it is China or whether it is coming from some kind of alignment with Iran on opening the Strait of Hormuz. And I think what Trump did was more or less try to step away, saying that we don't care. That way, yeah, it is not what the Iran is doing just for hurting US, but also now it's the world against Iran, and they have to open the strait or not. So I think that's where we are in general. What we are seeing right now is kind of market wait and watch mode. This is a 3-day long weekend. People are going to digest that news. We do expect that there will be volatility coming back in the market once more news comes in over this long weekend. especially around whether there is an escalation. There is this rumors around the ground invasion, which is being planned to get uranium, which is one of the objectives which Trump defined or Marco Rubio defined recently as one of the main objectives, which is still pending from U.S. perspective. Also, we are seeing that Israel is still continuing in their attempts to go and bomb more places and more of Iran's supplies. In fact, last 24 hours, we are seeing some escalations on the infrastructure where they are bombing a bridge or something. So all these things, I think market will expect and react next week. And I think there may be some more drop from there because we could not clear the resistance at 6,600 and the 200-day moving average. But I think the question is, again, watching the VIX, watching the oil prices, and if oil settles down or if there is some solution to Strait of Hormuz, I don't think that that would do any. I mean, that can actually do a lot of good for the market. And the second part is, as we said, that market will accept the new reality. See, inflation is just one part. Means we have gone through a great bull run and this whole AI boom, even when inflation was very high, starting from 2022 and 2023 and so on. So that is one thing I would like to highlight. Like when people are thinking about doom and gloom, yes, it has much more impact on some other countries who are very import dependent. But for US markets, at some point, markets will settle to the new reality of high oil prices, settle to the reality of little higher inflation, where which we have gone through before. And then are we still overvalued? Probably not, because as we said, the tech stock earnings, the overall market optimism still remains at this moment. And it's more about right now the volatility around war because it's so uncertain. And maybe it will take a few more weeks and then we will start seeing something better. All right, so I think this is most of the discussion we wanted to have. So I think we can take questions here on if there are a few people watching on YouTube. I think quite a few people are watching on YouTube today. So you can also add it in the YouTube chat. If you have questions, we can take those. And I think there's a delay here from Zoom to YouTube. So just keep that in mind. It will take some time for me to be able to see those questions. And you can always join Zoom as well, the people who are part of the subscription group. And I think you are on a macro channel, so you have the Zoom registration also. So let me give it a minute or two for questions to come in. Right, so I think this delay is going to cause a little more issues. I think quite a few people are watching today on YouTube. So folks who are on Zoom, feel free to ask any questions if you have. Otherwise, we will just wait for any comments or questions on the YouTube live. So I see some questions on the Zoom coming in, so on the YouTube coming in. So Bitcoin price action. So I think it's we did not see that, but I think overall Bitcoin has been pretty much consistently consolidating and did not really drop much. So let's have a quick review by sharing the chart, and we can go around that. So here we go. So the Bitcoin has actually been sitting on, like if you see from the war perspective where we started, I think was one of the more stable assets. It did have a rally. One of the discussion which I think the crypto community was having is there was a time when US had bombed some of the very aggressively some of these Bitcoin mining facilities of Iran, and they have been selling consistently. So this was one of the explanation given for this run up. But overall, as you can see, we are consolidating. It's one thing which has actually been very stable, versus the rest of the market since the war. And it is kind of forming a base in this zone, 65 to 70K. So I would say it's very clear that what is happening with Bitcoin is mostly consolidation cycle. There is definitely because it has decompressed so much that the liquidations are not impacting it. It's mostly things which were in a higher zone. So overall, we will be closely watching if 65K is held and it continues its up run. But I think it's very healthy for Bitcoin from that perspective in terms of where we are. And I think somebody's asking about the precious metals. I think gold has again, after getting liquidated, this was mostly a liquidation cycle, as we have been talking for for a long time. That in January we told almost everybody in Proflex community that it was kind of riding a speculatory wave, and it has definitely gone away from the fundamentals. This was very visible when the liquidation started in the rest of the market, that the big drops happened around that time. And since then, I think gold has kind of settled into a move. Um, Now, one more thing we need to understand is that all these things, whether it is gold, whether it is Bitcoin, all these are in the event where US is further more and more isolating itself with the war. I think we need to understand that gold, silver, and all these asset classes will be in high demand. The reason being that we have pretty huge, um, kind of move which people are expecting away from dollar. I'm not suggesting that the dollar is going to lose out in long run, because as we have always discussed at Proflex, that there is no real big alternate available. But on the other hand, there will be more and more demand for gold and Bitcoin to diversify away, especially when you talk about foreign reserves and so on. And we all know that the consistent demand is always coming from China, because they still have quite a big allocation into US treasuries. And that will always be a challenge for them to, especially because now it's almost pretty much out in open, the US and China, whether it is trade war, whether it is Iran war, I think they're always on the opposite side, pretty openly talking against each other. So I think that is the consistent bid from China and many other countries now, given the what is happening in terms of, we call it deglobalization. So, but again, as I said, right, when there was this speculatory wave in the late 2025 and early 2026, which the bubble has kind of burst, we have settled down, and we are seeing much better, just like Bitcoin, which consolidated earlier, now gold is consolidating and settling into its long-term move. So I think that is, and maybe I think the problem with gold is that because it was one of the safe haven assets in the recent drop, so we have to watch out the correlation between stocks and gold also. At this moment, we are seeing that gold is definitely seeing inflows again. And Bitcoin saw inflows first in the original drop of equity market, and now it's correcting again. So overall, both of them are doing as a more like a safe haven asset. They're operating like that for now. Okay, so well, let's see the next question. Earnings season will start soon. Would there be driving the market in near future rather than war fears? I would say earnings can definitely impact for two reasons. One is that most of the tech stocks, they have really lost a lot of value in terms of valuations. They are pretty cheap now. They are kind of some of them are like trading at 2025 P. Now, short term, I don't see much impact to them, like for the war, other than, yes, higher energy prices, probably a little bit of impact on a higher debt cost if the interest rates keep rising in terms of the 10-year yields. But I think, having said that, we know that the whole AI super cycle is still upon us, and there is no long-term impact seen right now. There have been some theories going around that Middle East investments will be impacted. I disagree with that. I know a lot of people have been theorizing that, because of this war, the Middle East will be weaker. Means I would say it's exactly opposite of, once this whole Strait of Hormuz reality sets in, means once this whole um, logistics issue are resolved, you need to understand that Middle East still thrives on high oil prices. So we need to also understand, other than the cost of energy being higher and a lot of probably the cost per token will go up slightly because of the energy being more expensive. But I don't think that's a huge cost factor right now. Probably that might impact a little bit of investments, but nobody's pulling back on the AI right now. So most of the earnings driven, for the tech, the big tech, I think they are still going to show great earnings. They're still going to show. I think that the valuations are still cheaper, especially after this correction, and probably that will be a good boost. But we are still like 3 weeks away from that, so we have to first watch out the technical levels, because market cannot stay here with the kind of volatility we are seeing, with the kind of even if you look at VIX of 24, it is not the normal levels. It's still, we are looking at 1.5% move per day, which is huge. So I think let us see how we land by the before the earnings, but it's a good question. I think earnings are not going to look bad. We do expect that there will be definitely some kind of push in the market from the earnings. Like every time people start discussing the valuations, that's always useful. And it will be also interesting to see if there is any change in their kind of capex, especially all the hyperscalers who have been now relying on borrowed money and on debt. Yes, there can be some discussions around that, because what will happen is that if you don't have the cost of your capital will start going up, and that can be a big issue. So let's see how that goes. But that's a good question. I would say earnings, and I would be very, very interested in how the valuations are, reviewed, because every time you will see, even before the earnings, analysts will start talking about what is the PE ratios, what is the forward PE, and once you see that some of these stocks have become so cheap in this correction, there will definitely this can trigger some buying. And if you see even now, what has happened in last couple of weeks, or especially last week, the buying on the after the market started getting optimistic, there was a big jump in people buying tech stocks. Some of these tech stocks recovered very fast, and that can further accelerate once people get some respite from volatility. I think it's mostly around the fear right now, and once the fear is over, then we will see more people coming in and buying these tech stocks. All right. So any other questions, guys? So I think otherwise as I said, we have a pretty interesting position right now in the market. So as a summary, all we are saying is that market is getting cheaper. It is way better than where it used to be earlier in terms of the tech stocks. We are living at the uncertainty of where the oil will settle. Market is US is flush with oil. Middle East has a lot of oil. The only challenge is the logistics getting resolved. And I think once we have that resolved, we will see. I think in the next 2 to 3 weeks we will know. Be ready for corrections. Be ready for, if you are looking for building a long-term allocations, this is a great time on if market corrects again because of escalation in the war this week. What we have seen is that there is a lot of pent-up capital which is ready to come into the market. So which we saw in this week. Even after Trump disappointed, we had market going up again. And I think once we saw that there is there is no longer a bigger drop happening, we saw a lot of people buying into the market. So that will continue while it will be a volatile ride. So just be patient, find out opportunities to add when any more corrections happen, and most importantly, manage your margins, manage how your portfolio looks when market goes down, because as you always say, long-term markets go up as long as you don't get liquidated or you don't get forced to sell at a wrong time. So that's the most important thing which we have to watch out for. Especially if you're playing options, or if you're playing margin trades, or if you are, or some kind of heavier leverage. If you are buy and hold kind of investors, this is just a phase which will pass. If you can add on to at these levels, this is a great time, I would say. We have got pretty good significant drawdowns in some of these good names, really promising earnings on AI, and what people are which all of us are excited about once this war is over. So thanks again for joining. Have a great weekend, and hope we see much better markets going forward. Thank you. Bye-bye.